Going from $0 to $1 million raised, 1 to 10 million, 10 to 250 million, and 250 million to $1 billion. It's actually the same three activities because there's only three ways to raise money, but those three things evolve at each of those breaking points, right? Each of those levels. And so that's exactly what I want to share in this video. What we've done here at Aspen Funds to go from $0 to $250 million, and then how we're going from 250 million to $1 billion over the next 5 years. My name is Ellis, Hammond. I'm the Vice President of Capital here at Aspen Funds, where we've raised over $250 million of other people's money for real estate projects that we're working on. And I make these videos to help other capital raisers and fund managers just like you to grow and scale your capital raising business so that maybe one day when you're at a place where you're raising enough money, you can partner with us here at Aspen Funds. So let's jump in here, and I want to start by sharing the three things. There's only three things that you can do in order to raise more money. But those three things, like I said, at every level, they evolve or they have layers to them, right? They mature. And so the first one is this: you can increase the number of investors. That's number one. Number two is you can increase the investment size, meaning how much someone invests with you. So if your minimum is 50 or 100 grand or 250 grand, right? You can increase the investment size in which someone invests with you. And then number three, you can increase the frequency of investment. So how many times someone invests with you. And so typically when you're starting out, or when we're starting out, right, from zero to your first million, from zero to really, I would even say 10 million, the most important thing is increasing number of investors, right? Like, unless you just have a big whale, but really for most folks, it's going to be increasing the number of investors. This is your lifeblood. And so we've done a video before about building your list. And this is the most important activity early on, is how do we grow our list in order to increase the number of investors? And this is still true at every stage. We're always adding more investors. But I would say that that first 10 million, 100 million raise, it's bringing more people into the pipeline, right? It's typically kind of one good product as you master, or you say, hey, I'm known for this. That was exactly what happened in Aspen Funds, right? They were really good at distressed mortgage notes. In the first 10 years of their business, that's all they raised for, was one thing, was distressed mortgage notes, the growth of that, the income that came from those. And they built an entire business. Their first $100 million or so raised was just around this one offering. And so that's exactly what I would recommend you do, is just like become known for one thing, right? And build your niche of investors for that. So when someone thinks of distressed mortgage notes, they think of Aspen Funds. When they think of multifamily investing, they think of you. When they think of, ATM machines or whatever you're raising for, right? It's like, this is what you're known for. And so when someone says, hey, I'm interested in this, they know, go to you, right? When they think of distressed mortgage note investing, they go to Aspen Funds. That was the first $100 million. Exactly what we did was increasing number of investors. And as you go, you can really start to think about number two, which is increase investment size. And I think the biggest, I'll tell you an interesting story for this, is I remember sitting down with a friend of mine and we were talking about average investment amounts. And he's like, what's your average investment amount? I'm like, we're probably, around 100 grand or so for our average investment. I'm like, what about you? He's like, we're at 25. I'm like, 25? I'm like, dude, what's your minimum investment? He's like, my minimum investment is 50 grand. I was like, well, how can your average investment be 25 grand if your minimum investment is 50? He's like, well, I have a sales guy taking calls and I guess he lowers the minimum. And so I said, let's talk through this. So I actually, well, who is this guy? He's like, well, he's a young guy. He just came out of college. I was like, here's what I can guarantee is happening. You have a young guy who's never invested money before, and he thinks that $50,000 is a lot of money. And so whenever he gets to the point in the conversation where someone asks, well, what's your minimum investment? His probably goes something like this: the minimum investment is 50, but I can probably take less. And sure enough, he went back and listened to sales calls from that young guy, and it's exactly what was happening. Why is that? Because this young man had a different perception of what was a lot of money. And the thing that I had to learn early on, coming out, again, remember my background was a college pastor. So, $1,000 is a lot of money to me back then. But I got into an industry where we were raising large amounts of money, right? With $50,000, $100,000 was the average check size. And so I had to quickly learn and even change my mindset to what a lot of money was, because what a lot of money was to me early on was not a lot of money to someone else. And that continues to grow. Even today, we're at $250 million. What's a lot of money for me may not be a lot of money to the person that I'm having a sales conversation with, right? Who maybe be looking to deploy $1 million at a time. And so I would say this is massive for you as a capital raiser, is constantly be asking yourself, what is my mindset about money? Am I around other people who are thinking differently about money? And then listening to your sales conversations and making sure you're not giving people outs to invest lower because that's what you think is a lot of money. This is the same true I remember running my education business, and my price started at $6,000. And eventually over the next 12 or 18 months, the price was $20,000. What changed? Nothing about the product changed. It was just what I thought was a lot of money changed. And so this is so true in capital raising as well. And maybe one of the easiest ways to do that is just raise your minimum. And so I see a lot of guys starting out, they start their minimum at $50,000. Why? Because they just think that's a lot of money. That's what other people can afford. Where, if you were to instantly tomorrow, you could change number 2 by just raising your minimum investment to $100,000. You don't have to do anything different. And you could literally raise more money in most scenarios by just raising the minimum amount. It doesn't mean you can't reduce that at times for other people, but when you get on a call and you say, hey, what's your minimum investment? Just say it straight face. Our minimum investment is $100,000. And I'm telling you, I've done this long enough. 3 out of 4 people will not question your minimum investment. The fourth person will say, I can't really do that. And that's where you can potentially work to make exceptions. And this is a great way to raise more money. It's what we've done a lot. And, we even have offerings now where our minimum investment is $250,000. And I'm telling you, it's amazing to look at the roster and just see 250, 250, 250, 250, 250, 250, because that's the minimum investment and people don't question it. And then number 3 is the increased frequency of investments. And again, early on, right, here at Aspen, we had the same type of funds over and over again, right? And so over the course of 10 years, we had, Growth Fund 1, Income Fund 1, Growth Fund 2, Income Fund 2, all around mortgage notes. And so that was the frequency, right? And as we had new deals and new offerings around the same product, people would invest more. And this is why I would say starting out, instead of doing like an open-ended fund, it's typically easier to do one deal at a time because people want to kind of test. They want to put money in this deal, and they want to put money in this deal, and they want to put money in this deal. Even though maybe it's the same asset class, they like the diversification of being in different deals. And so early on as a capital raise in the first million, the first 10 million, really even the first 100 million, individual deals, individual offerings is really helpful because you can get the same investor investing multiple times. So that is, I kind of gave you some things for the first million, really up to 100 million, we're at 250 million today, going to $1 billion. I want to share, let me go back through these 3 things, okay? Because it's really not a list. It's really more of a circle. And as you grow at each of these levels, you're constantly coming back to them. But again, there are layers. And so increasing number of investors, that never really changes for us. We do it different, right? As we grow. So one of the ways we're growing investors now, where we get most of our investors is actually from referrals. So, when you're going out, you're just going to new people early on as you grow. And really for us, as when I look at the things that are going to help us grow from 250 million to $1 billion, we have 850 investors. So do I really need to go out and just go spend a bunch of money on marketing? Not necessarily. We do that. We're constantly, we're running Facebook ads too, but just going to our current investor base and asking them who they know, right? So having a KPI for our sales team, they know that they need to be producing at least 5 referrals every single week from our investor community, right? And so that is a way that we're increasing number of investors, but we're doing that from our current investor base. And this is going to have a massive impact. Increasing investment size. Like I've said already, we're at a place now where we can actually, the bar is constantly being raised because we have the demand for that. And so when you think about your minimum, it really is kind of one of those supply and demand. Typically when you're starting out, your minimum is lower because you don't have a lot of demand yet. But most of our offerings now oversubscribe within a few weeks. And so because our demand is higher and the supply is less, we can think about increasing our minimum investment on offerings from, let's say, $100 to $200 or maybe $250,000. And the reason this is important is, again, we want to attract better clients. The reality is, a smaller investor, this is the rule. I'm telling you, it's the rule in sales. It's the rule in any business. I've sold multiple products, education, investments, etc. The smaller the amount, the more pain or more trouble typically the clientele is. And so, like, as a capital raiser, you want to continue to raise the bar, raise the minimum, because I'm telling you, the bigger the investor, the less problems you will have. And it's because, like, people who don't have a lot of money are paying more attention to that money because they don't want to lose it, right? And I'm just telling you, like, the bigger investor, the less problems we have, because they're focused on bigger things. Not to say their money isn't important to them as someone else, it definitely is, but it is a rule of thumb that smaller investors typically give more headaches than larger investors. And so, again, we're continuing to increase our investment size because we want to attract larger investors. I remember sitting down with an oil guy, and I learned this early on, or I learned in this conversation. I'm glad I didn't say our minimum was 100. And this is when I learned this, because I wasn't really sure. And so I went into the meeting. I knew what our minimum was $100,000. And so when they asked me the question, well, what's your typical minimum investment? Instead of saying, hey, it's $100,000, I actually was like, well, let me take a step back and let me ask you, what are you typically looking to invest? What's your minimum to consider a deal? And instead of saying $100,000, you know what he said? He said, we typically don't deploy less than $1 million into an asset. And that kind of blew my mind, because here's a guy who had so much capital to deploy annually that investing $100,000 at a time would take way too much of his time. So instead of investing $100,000, he would invest $1 million at a time, right? And so, like, there are some opportunities. There's a group of people, and I would say this is true at every level, that don't even take your offering serious if it's 25 or 50K. That they're not even going to consider the offering unless it's $250,000. I mean, take this like with a mastermind community, right? Like, there's a certain quality of people that pay $10,000 to be a part of it. There's a certain group of people that pay $25K to be a part of it. And there's a certain group of people that want to be a part of something at $50,000. And the people who pay 50 typically don't join things at $5,000 or $10,000 because they want access to a higher quality of product. And the same is true, and it's even a perception thing. By increasing your minimum investment amount, you attract different people because the price tag shares, hey, this is a more exclusive opportunity. And so, again, you'll see from us as we go to, look to raise more money, we will raise our minimum investment and go and start to just work with kind of the I would say, I don't want to say we'll work with a lower percentage of folks. But again, it's the 80-20 rule, where most of our capital here at Aspen Funds comes from 20% of our investors. And so we will continue to create ways to serve and better serve those 20% of investors. And then frequency of investment. So again, going from 250 to $1 million, this is kind of the shift at Aspen over the last couple of years, is that the focus for the first decade was one thing, distressed mortgage notes. But if you know Aspen now, you've seen that we now are more in the private equity side of things, where we've done multifamily, and we have a private credit fund, and we're now launching our second oil and gas fund, and we have industrial development, right? We have wings and teams and leaders of all these different asset classes. And what we found is that, folks who come in from the income fund and they've gotten money over and over and over, now they're looking to deploy capital into things that have growth, right? And so if you think about even your own investment money and your own investment dollars, if you have let's just say it, if you have $1 million, you're likely not going to put all $1 million into one strategy, right? You don't need income from that. You want a little bit of that money earning income. You want some of that money maybe that's going to grow for you over time, and some of that money maybe is for tax benefits. And so number 3, the frequency of investments. As you start to offer different products, you can get more of the investor capital. Why? Because they're looking for more things. I'm telling you, if you only have one thing, you're not the only person they're investing with. They're investing with other people because they want other offerings. They want other types of assets, other types of benefits from investments. And so if you can continue to figure out different ways to offer different things, you can get more of their investment dollars. This is why you might consider working as a fund of, even if you're a lead sponsor. I love a fund-to-fund model because it allows you to maybe stay focused on your core thing, but then work with other experienced sponsors to offer different products. We have a lot of people do that here at Aspen Funds, where maybe they have their own thing, but then they create their own fund of funds to work with us to bring money into something like oil and gas or our private credit offering, because it's something different that their investors aren't getting over here, but they know that you've already built the trust, right? So we're at $250 million. We have 850 investors. We build a lot of trust with people, right? And so instead of just staying focused on one avenue, we spend all this time building trust. All we need to do is just create different offerings over here, and we can essentially transfer that trust that we've spent a decade building and now be able to, raise more money for different opportunities. Because the hardest thing early on, if you're doing from 0 to a million, million to 10, and 10 million to 100, is building trust. But once you have that trust, right, and that credibility and that track record, it allows you to expand into other things. And so the frequency of investment increases. And this is massive for us, right? And so we have folks, we have 3 offerings right now. And as I talk to investors, they know, hey, I got, they will say, I have money set aside for the oil and gas fund you have coming up. And I'm deciding between your income fund or maybe your private credit fund, right? And so the fact that we have multiple things, if we only had one, we'd just be getting that initial investment. But because we're able to offer multiple offerings, there's, we're getting different dollars from the same investor. And so again, this is the things that we're focused on from 250 to $1 billion. As we increase our number of investors, it's really going to come from referrals, our current investor base, the investment size as we raise our minimum, and then the frequency of investments is offering different types of investors. So I hope that's helpful to see, like as you grow, there's only 3 things again. You increase your number of investors, you increase your investment size, and you increase the frequency of investments. But those 3 things have layers, each one. And so it's not really a list. It's more like a circle.